Hello, my name is Maya Sybil. I am a reporter and content producer at insuranceinvestor.com, and today I am joined by Xavier Debrun, head of economics and research at the National Bank of Belgium and a member of the European Fiscal Board. Hi, Xavier. It is great to have you here today.
Hi, Maya. It's great to be here, and thanks for having me.
Welcome. And Xavier will be speaking on day 2 of Private Markets Investor Europe 2023 in London on the 29th of March. That's the second day of the event, and he will be giving the opening guest presentation called Megatrends and Public Debt Toward a Mass Extinction of Safe Assets. Xavier, it is great to have you, and I'm going to dive straight into the questions now, and we will start with question number 1. So let's talk about the predicted mass extinction of safe assets. In your view, what would this phenomenon look like? Who would it most affect? And how can investors and asset managers adequately prepare?
Well, first of all, I do not want to make any prediction here. I mean, predictions in this world are a very difficult exercise and certainly much more an art than a science. No, the only thing I want to flag here is the fact that we face a serious risk if policies, and by that I mean essentially fiscal policies, do not change course. Now, as a reminder, a safe asset is one that delivers the promised payments in almost every possible state of the world. So it's great. But what does it mean to have a safe asset? It means essentially to have a security which has zero credit risk. So typically, bonds issued by governments are considered to be safe, and this is especially the case for countries that have no recent history of default or debt restructuring. The mass extinction of safe assets I have in mind refers to a situation where a growing number of governments would face a material risk of not being able to face their financial obligations, making their bond unsafe. In the aftermath of the 2008 global financial crisis, public debt have been rising almost everywhere, and in many cases, public debts were already high to start with. So if such trends continue, we could see higher sovereign credit risk across the board and thus a shrinking pool of safe assets in the world. Now, how can we prepare for a riskier environment? Well, presumably by developing further risk analysis and sharpening strategies to mitigate that kind of credit risk. One issue, though, is that the underlying factors shaping debt developments are correlated across countries, which obviously complicates the task of portfolio managers.
That's wonderful. Thank you so much for that. And now we're going to move on to question number 2, which is, so many have noted, many in the industry have noted that private debt remains a highly discussed asset class within the alternatives market. Do you foresee any major changes in this space come 2023?
Well, private debt is also high. It's not just a public debt problem. It's an overall leverage problem. And actually, when you look at the recent numbers that have been published by the IMF, and I'm referring to numbers at end 2021, private debt is actually well above 100% of GDP in many, many countries. Just by way of example, it's 159% of GDP in the US, 232 in France, and almost 250% of GDP in Sweden. So like for public debt, the big issue is how well the more leveraged entities can cope with the global monetary policy tightening cycle. Tighter money does not only mean higher nominal interest rates, but also a decompression of risk and term premia. So, market participants will start really discriminating much more than before between different classes of risks and different debtors. So again, it will be essential for investors to carefully monitor debtors' vulnerability to the inevitable increase in debt service costs. One element also that we should keep in mind is that excessive private leverage, has a way of showing up in public balance sheets. We all remember the 2008 global financial crisis, where indeed we were facing these nasty sovereign banking sector feedback loops, which showed that indeed high private leverage can quickly morph into excessive public leverage.
So, Xavier, your keynote presentation title mentions megatrends. Can you give us a 10-second rundown and or a definition? Why are they critical for investors and asset managers?
Well, I will not even try to define what a megatrend really is, but I'm just going to quote the four megatrends, which in my view are driving public and private debts up. The first is aging population, then comes climate change, third is trade fragmentation, and finally we have income inequality. I mean, aging is mostly a public sector issue. We all talk about the sustainability of social security and public pension schemes and so on and so forth. It's an issue, and governments definitely don't do enough to cope with that problem. Climate change is mostly a private sector issue, although there are also, of course, needs to invest in a new public infrastructure. But climate change is really, it really means a greater need for green investment. And the other two megatrends are mostly threats to economic growth. So overall, we can expect pressures to invest both in the public sector and the private sector. We have pressures to invest more, and at the same time, savings, we just don't know what the trend in savings will be. But if anything, aging would contribute to lower savings because people who are close to the end of their lives, typically they save much less than when they are 50 something and face the prospect of retirement and really want to accumulate as much as they can to maintain their standard of living. So the bottom line is that we are contemplating a future which is made of pressures to accumulate more debt to fund investment, green infrastructure, and so on, higher interest rates because of less savings available, lower growth, and a higher probability of tail risks. And here, clearly, those risks related to climate change and to deglobalization and geopolitical risks more generally are clearly on the radar. So by definition, those risks that are related to those megatrends are global. Therefore, they are more correlated, and therefore they are less easy to insure against. If they are insurable at all. So it is likely that governments will be called to play the role of the insurer of last resort. We've seen that with the COVID pandemic. I mean, governments jumped in to insure a risk which by definition couldn't be insured. And that means that this whole environment could also imply more shocks to public sector balance sheets and further boosts to public debts.
Wonderful. Yeah, that's a really helpful rundown. And that'll take us right into our final question, which is, so of these aforementioned megatrends, which do you expect investors and asset managers might encounter, let's say, in the first half of 2023, and which will be more important further down the road?
Look, megatrends are by definition long-lasting and global. That's how I've just tried to, characterize the four megatrends. I mean, clearly they are long-lasting and global, so it's difficult to say in the short term which one is going to be, the most important. But I think the real wild card here in the short term or the medium term is the potential acceleration of deglobalization due to the ongoing geopolitical tensions. I mean, these tensions could actually turn, if they persist, they could turn into some kind of tectonic geopolitical shift, which could lead then to persistent supply chain disruptions, rising production costs, lower economic growth, and rising interest rates. So recall indeed that those supply side disruptions we have in mind are typically stagflationary. That is, they tend to cause a combination of higher inflation and lower economic growth. So the other trends have been with us for quite some time now, and I would say that their effects are largely predictable. I mean, so the real wild card in the short term is the geopolitical situation. Of course, the best advice then that I could maybe give, if I am allowed to give any kind of advice, is probably to fasten your seatbelt and prepare for a bumpy future.
Wonderful. Thank you so much. Thank you for sharing your thoughts with us, Xavier, and we're very excited to hear you speak. As previously mentioned, Xavier will be speaking on day 2 of Private Markets Investor Europe 2023 in London on the 29th of March. And his opening guest presentation is called Megatrends and Public Debt Towards a Mass Extinction of Safe Assets. And you can find more information on europe.privatemarketsinvestor.com. Thank you so much, Xavier, and we will let you go now.
Thank you very much.